Pasricha, who's the Chief Economic Advisor, Union Bank of India, joining us this morning. Great having you here, Kanika. Give us a sense, what does this dividend mean broadly? Was it largely in line with what we were penciling in? Do you believe that a larger payout could well have been undertaken given everything that's playing out?
So, first of all, thanks for having me on the show. And absolutely, before the dividend was announced, our estimate was close to 3 lakh crores, but market consensus had actually risen from 3 to a range of 3 to 3.5 lakh crores. Of course, if a number of 3.5 lakh crores would have come in, the fiscal cushion provided by RBI dividend would have been way higher, given what Ankur also stated that, PSU banks plus RBI, the number was around 3.05 lakh crores. But at the current juncture, slight buffer from RBI dividend. But what we think is that still fiscal slippage from excise duty cuts of close to 10 rupees per litre A. B, we are going to see, spike in fertilizer subsidy bill as well. 70,000 crore is what the media source estimates are calling for. We think the number can be higher. And C, given there is possibility of a growth disruption because of geopolitical tensions that may also weigh on tax collection numbers. It will be led by where the nominal GDP growth settles. So all in all, RBI dividend, slight buffer. There are various sources of fiscal slippages which need to be watched out for as well. Thanks.
We've seen roughly around 8 rupees of fuel hike so far, fourth hike being today. What could be the impact on the May inflation number because of that, and how do you see the entire overall inflation number going into next week's monetary policy?
So, our estimate was at around 8 to 10 rupees per litre of petrol and retail petrol and diesel price hike would lead to upside risk to inflation numbers in this year of around 40 to 50 basis points. See, frankly speaking, RBI in its MPC meeting pegged oil price at $85 per barrel average for FY27A. B, then using this oil price, their number for the year was around 4.6%. If we just go by the extent of excise duty hikes, and of course there are other prices also rising, we think not at 85, but even at $90 per barrel average, if we assume for the current financial year, our inflation number is tracking close to 5%. Of course, the balance of risks remain more on upside rather than downside at the current juncture, and that needs close watch because the pressure is not just on auto fuels, it's also on the broader fuel space and also on core CPI space because core WPI is spiking in the latest reading of 8.3%. It was not just fuel, but also core WPI. That may have a spillover impact on core CPI eventually, in our view. Thanks.
So, basically you're saying that the second order impact will start trickling in the May numbers, which will come in next week. If that is the, or in June. So, what would be the May inflation number that you're looking at? Earlier it was estimated to cross 4%. Now are we looking at around 4.5 or so because of the 8 rupee price hike in fuel and 3 to 4 rupee price hike in PNG?
Frankly speaking, our estimate before this fuel price hike for the May number was close to 4%, 4.05. While 4.5 still looks stretched because the previous inflation number on CPI also surprised us on the downside with the extent of pass-through seen. The pace of pass-through in CPI has been slightly more subdued compared to what you see in WPI. So I wouldn't want to peg it at 4.5. Maybe somewhere close to 4.2, 4.3. But of course, in the coming days, the way food prices also pan out, we would want to look at the final numbers. But not 4.5, closer to 4 or maybe 4.2% is what I would peg the May inflation number at the current juncture. Thanks.
Kanika, thank you so much for coming in and speaking to us this morning, giving us that perspective.
Thank you.
What we'll do is